Assalamu alaikum everyone, and welcome back to the channel. Today, we're diving deep into a topic that's not just about numbers and charts, but about history, value, and some truly extraordinary events in the financial world. We're going to talk about silver, a metal that has fascinated humanity for thousands of years, serving as currency, a store of value, and a crucial industrial component. But what I want to share with you today is something exceptionally rare, an event that has only occurred twice in over half a century. Imagine the last 50 years of financial history, the booms, the busts, the crises, the innovations. Through all of that turmoil and change, silver has only experienced a monthly gain of 65% or more on two separate occasions, just twice. Think about that for a moment. Out of more than 600 months, this massive surge happened only two times. The first time was back in February 1974. The world was a very different place. We were in the middle of the 1970s energy crisis. The OPEC oil embargo had sent shockwaves through the global economy. Inflation was soaring, and there was widespread economic uncertainty. People were desperately looking for safe havens to protect their wealth, and many turned to precious metals like gold and silver. In that environment of fear and instability, silver's price exploded, jumping by an incredible margin in just a single month. It was a clear signal that when confidence in traditional paper currencies and economic systems falters, hard assets often take center stage. This wasn't just a market fluctuation, it was a powerful statement about the economic anxieties of the era. Now, let's fast forward 5 years to the second instance, December 1979. The world was once again grappling with high inflation, geopolitical tensions with the Iran hostage crisis, and the Soviet invasion of Afghanistan. But there was another, more specific factor at play: the famous story of the Hunt brothers. Nelson Bunker Hunt and William Herbert Hunt, two wealthy Texas oil men, believed that paper money was on a path to collapse due to inflation. They decided to corner the silver market. They started buying up massive quantities of physical silver and silver futures contracts. Their goal was to control a significant portion of the world's supply, driving the price to astronomical levels. And for a time, it worked. Their aggressive buying pushed the price of silver to historic highs. In December 1979, the market went into a frenzy, and silver posted another one of these monumental 65% plus monthly gains. It was a story of speculation, market manipulation, and a clash between private ambition and regulatory power. Ultimately, the bubble burst in early 1980 in what became known as Silver Thursday, when the price collapsed, but not before that incredible surge in December 1979 became etched into financial history. So we have two instances, 5 years apart, both driven by a combination of widespread economic fear and, in one case, a massive speculative play. What does this tell us? It teaches us that these extraordinary market moves don't happen in a vacuum. They are born out of specific, powerful catalysts, be it runaway inflation, geopolitical crises, or audacious market manipulation. A 65% gain in a month is not normal market behavior. It's a signal, a historical marker, that tells us something profound was happening in the world at that time. Now, why is this so important for us to understand today, in 2024? Because history, while it may not repeat itself exactly, certainly rhymes. We currently live in a world filled with its own set of uncertainties. We have geopolitical tensions in multiple regions, persistent debates about inflation and central bank policies, and a global economy that is constantly evolving with new technologies and new challenges. When we see such rare events in the past, it forces us to ask critical questions about the present. What are the conditions today that could potentially lead to such a massive repricing of an asset like silver? Could it be a loss of confidence in fiat currencies? Could it be a major supply chain disruption, especially given silver's growing importance in green technologies like solar panels and electric vehicles? Or could it be another wave of speculative interest from large investors? Thinking about these past events is not about predicting that silver will jump 65% next month. It's about developing a deeper understanding of market dynamics. It's an exercise in financial literacy. It reminds us that markets can be unpredictable and that so-called black swan events, while rare, are a real possibility. For the average person, this isn't about trying to time the market perfectly. It's about recognizing the importance of diversification and understanding the fundamental reasons why people own assets like gold and silver. They are often seen as a form of financial insurance against the very kind of turmoil that triggered those historic price spikes in 1974 and 1979. Let's break down the role of silver a bit more. On one hand, it's an industrial metal. The demand for it grows as our technology advances. Your phone, your laptop, solar panels, electric vehicles, they all need silver. This creates a solid baseline of industrial demand that is set to increase as we transition to a greener economy. On the other hand, it's a monetary metal. For thousands of years, it was money. This monetary legacy is deeply ingrained in our collective financial psyche. So when investors get nervous, they often flock back to silver, not just for its industrial use, but for its historical reputation as a store of value. This dual nature is what makes silver so unique. It's caught between the world of industry and the world of finance, and sometimes, when the conditions are just right, or just wrong, depending on your perspective, this dual nature can lead to explosive price movements. The events of 1974 and 1979 are perfect examples of the monetary aspect of silver suddenly overshadowing its industrial one. So, what should you, the viewer, take away from this? First, appreciate the rarity of these events. Big moves in financial markets are historic for a reason. They are not everyday occurrences. This should caution you against believing anyone who promises guaranteed, astronomical returns in a short period. The market just doesn't work that way consistently. Second, use this historical context to inform your own financial strategy. Understand that the world is a complex place and that unexpected events can and do happen. For those who are prepared, who have a well-thought-out and diversified portfolio, this unpredictability can be managed. For those who are not, it can be devastating. As the saying goes, those who do not learn history are doomed to repeat it. In finance, those who don't understand historical market extremes may be unprepared for future ones. Third, look beyond the price. When you see an asset like silver making headlines, don't just ask, how much did it go up? Ask why. What are the underlying economic, social, and political forces driving this change? Answering that question will give you a much richer and more useful understanding of the world than just looking at a price chart. It helps you become a more informed investor and a more knowledgeable observer of the global economy. The story of silver's 2 massive monthly gains is more than just a piece of financial trivia. It's a lesson in economics, psychology, and risk. It's a reminder that beneath the surface of our complex financial systems, the age-old forces of fear, greed, and the human desire for security are still very much at play. It shows us that in times of great uncertainty, people return to things they can trust, things that have tangible, enduring value. So the next time you hear someone talking about silver, or any market for that matter, remember the lessons of February 1974 and December 1979. Remember that history offers us clues, warnings, and incredible stories that can help us navigate the future. These rare events are not just data points. They're powerful narratives about how our world works. Thank you so much for joining me on this deep. What if I told you that a simple piece of metal could predict the future of the global economy? No, I'm not talking about some mystical crystal ball. You might think of it as just something for jewelry or old coins, but silver is a powerful economic indicator, a mirror reflecting our collective hopes and fears. Every time its price makes a big move, it's telling us a story about investor confidence, global uncertainty, and the very psychology of the markets. Let's travel back in time. The 1970s. A decade of immense economic turmoil. We had the oil crisis, soaring inflation, and a general feeling that the world was on shaky ground. And what did silver do? It went on one of the most legendary bull runs in history. In 1974, and again more famously in 1979, the price of silver didn't just climb, it exploded. This wasn't a random fluke. It was a direct response to the chaos. People were losing faith in traditional currencies, in the dollar, and they were desperately searching for something real, something tangible to protect their wealth. Silver became that safe haven. This surge was famously fueled by the Hunt brothers, who attempted to corner the market, buying up massive amounts of physical silver and silver futures contracts. They believed, correctly, that in a world of printing money, the value of a finite resource like silver would have to go up. Their actions poured gasoline on an already smoldering fire, sending prices to unprecedented heights. But this story isn't just about a couple of wealthy speculators. It's about a widespread panic. Everyday people, watching their savings get eaten away by inflation, rushed to buy silver. It was a classic bubble driven by fear and a herd mentality. And like all bubbles, it eventually popped spectacularly. So what does this dramatic episode from the past teach us today? It teaches us that when confidence in the financial system falters, people flock to hard assets. It's a pattern we've seen again and again throughout history. Silver's price isn't just about supply and demand for industrial use. It's a fever chart for the health of the global economy. When the chart spikes, it's a sign that the system is running at temperature. It's a warning that big changes are underway. Now, let's fast forward. Think about the 2008 financial crisis. As Lehman Brothers collapsed and the global banking system teetered on the brink, what happened to silver? After an initial dip in the chaos, it began a multi-year climb, peaking in 2011. Once again, as central banks around the world fired up the money printers with quantitative easing, investors got nervous. They saw the value of their dollars, euros, and yen being diluted, and they turned to silver and gold as a store of value. The parallel to the 1970s is unmistakable. Economic uncertainty and currency debasement lead to a flight to safety in precious metals. And it happened again in 2020. When the world went into lockdown and governments unleashed trillions of dollars in stimulus packages, we saw another significant rally in silver prices. People were stuck at home, reading about unprecedented government spending, and many came to the same conclusion their parents and grandparents did decades earlier. In a world of infinite paper, finite silver looks pretty good. But here's the crucial lesson. These historic spikes in silver are not just a one-way ticket to riches. They are periods of extreme volatility and risk. Remember the Hunt brothers? Their attempt to corner the market ended in financial ruin when the bubble burst. Many small investors who bought at the peak in 1980 or 2011 lost a fortune. The story of silver is a double-edged sword. It highlights incredible opportunities, but it also serves as a stark warning about the dangers of speculation, market manipulation, and crowd psychology. Understanding these patterns is what separates a savvy investor from a gambler. It's not about trying to time the market perfectly or chasing every spike. It's about recognizing the conditions that lead to these events. High inflation, geopolitical instability, a loss of faith in government bonds and currencies. These are the ingredients for a silver bull market. When you see these factors aligning, you know that the potential for a significant move is there. But knowledge also means understanding the risks. A rapid price increase can be driven by speculation as much as fundamentals. You need to ask yourself, is this rally sustainable? Or is it a speculative frenzy, a bubble waiting to pop? Looking at history helps us identify the warning signs. When the media is screaming about new all-time highs, when your taxi driver is giving you silver tips, that's often a sign that the market is overheated and a correction could be near. This is where strategy becomes more important than prediction. Instead of trying to guess the exact top or bottom, a smarter approach is to understand the long-term trends. For investors, this might mean accumulating silver slowly and steadily over time, especially during periods of economic calm, as a form of financial insurance. It's not about getting rich quick, it's about preserving wealth over the long haul. For traders, it means recognizing the volatility and managing risk accordingly, using stop losses and not over-leveraging their positions. The story of silver is fundamentally a story about human behavior. It's a story of fear and greed, of panic and prudence. The metal itself doesn't change. Its properties are the same today as they were 100 years ago. What changes is our perception of its value, driven by the economic and political events unfolding around us. So, as we look to the future, what should we be watching? We should be watching the actions of central banks. Are they continuing to print money? We should be watching inflation rates. Is the cost of living rising faster than official figures suggest? We should be watching geopolitical tensions. Are conflicts emerging that could disrupt global trade and stability? These are the signposts. These are the clues that history tells us to pay attention to. Ultimately, silver's dramatic history isn't just for investors or finance geeks. It's a lesson for everyone about how our world works. It teaches us to be critical thinkers, to question the stability of the systems we rely on, and to appreciate the value of things that are real and finite. It's a reminder that while the price of silver can swing wildly overnight, the value of knowledge, patience, and a well-thought-out strategy is timeless. It's not just about chasing gains, it's about understanding the powerful forces that shape our economy. It's about being prepared, not scared. By studying the patterns of the past, we can learn to navigate the financial waves of the future with confidence instead of fear. Whether you're a seasoned trader, a student of economics, or just someone curious about how the world really works, remember this. History doesn't just repeat, it rhymes. The patterns are there for those who are willing to look, and for those who study them, uncertainty can be transformed into a powerful advantage. Thanks for watching. If you found this deep dive into the story of silver interesting, make sure to hit that like button and subscribe for more content that decodes the complex world of finance. We'll see you in the next video.